How's it going, everyone? My name is Derek Afasi. I'm the owner of Afasi Financial Group. Today's topic, I want to discuss with you term versus universal life insurance and fully explain the pros and cons of each. Now, just to be very brief, term life insurance is set up for a term duration of time, so it's a set duration of time, as opposed to the type of universal life insurance that I'm going to explain in this video is known as a guaranteed universal life insurance, and it's mainly set up for some sort of permanent coverage. So coverage that is going to be paying out regardless of whenever you pass away, your beneficiaries would at least receive, some sort of death benefit there. When you're looking at a term duration of time, meaning something that might be a 10-year term time frame, or a 20-year, or a 30-year, or 15-year, whatever the case may be, understand that this is kind of like a person is standing there with an umbrella, with an invisible umbrella over their head for that specific time frame. So if somebody has 10-year term life insurance, and they pass away within that 10-year time frame, well then whatever that death benefit is, and the death benefit is typically known as face amount. So you might see those words used interchangeably. That means that face amount would get paid out to the beneficiaries in a tax-free manner. So if this person had a 10-year term life insurance policy, but then unfortunately passed away in 12 years, well then there's no more death benefit there. So that's the risk that's associated with term life insurance is term expires. It's as if you're renting your insurance as opposed to a specific type of universal life insurance known as the GUL is as if you're owning your insurance. Now, there are ways on how you could leverage. I mean, term is very necessary, and you have, life insurance agents out there that they try to just bash term life insurance and only, place somebody in permanent life insurance coverage, and it all depends upon the individual situation. So permanent life insurance is typically set up there as a type of inheritance goal. And the reason why I'm trying to talk about guaranteed universal life insurance is because it's a permanent life insurance policy that is not associated, or that you're not concerned with cash value growth tied to that type of product. So if you might have looked at different permanent life insurance, you might have seen the things such as whole life insurance, or index universal life insurance, or universal life insurance, or variable universal life insurance. There's so many different slews of permanent life insurance coverage. Now, how a typical permanent life insurance policy works is an individual pays premium dollars into a plan. Kind of think of this egg shape like a permanent life insurance, or the inner workings of a permanent life insurance policy. With all sorts of premium dollars, it has to pay for some sort of death benefit that's associated with this type of egg shape. So majority of the dollars that someone's placing in there is going to the cost of insurance and all those different miscellaneous expenses, and then the portion that is not used to pay for that death benefit for that year goes into a secondary account known as cash value. So the cash value kind of acts like a savings account. The cash value is going to grow anytime that you net out, you pay more into that plan than what was necessary. So therefore, that's going to grow the cash value. And then also you have a sort of interest credit that's associated with that cash value as well. With whole life insurance, it's something known as a dividend rate. With index universal life insurance, it's known as an index. There's an indexing strategy. With universal life insurance, it's tied to interest rates. And with variable universal life insurance, that cash value is tied to mutual funds. So one of the main reasons why all these types of life insurance became very popular is there's ways on how an individual can manipulate that death benefit, make it go down to as low as possible so that you could essentially maximize the cash value growth associated with the life insurance policy, and then leverage that as supplemental retirement income for a later date and time. Now, if somebody's goal is primarily for maximizing out that death benefit, well, you're going to be paying extra dollars just for that cash value benefit, just as that savings component, as that additional retirement supplement, even though it's not necessary for your particular goal. So this video is meant for the individual that says, listen, I either want to maximize, how much term life insurance or how much life insurance I have during my working years, and then essentially maximize out my inheritance goal to my beneficiary, but make sure that I'm only spending my premium dollars towards that maximized death benefit, and I am not concerned at all with that cash value that comes into play as well. So with the term life insurance, you could leverage something known as a laddering strategy, which essentially says, and let me clear off the screen. So an example of laddering strategy would be an individual or husband and wife that, let's say they just took out a $300,000 30-year mortgage. Well, 9 out of 10 times, the typical life insurance agent would meet with this person and would say, hey, listen, you have $300,000 worth of a 30-year mortgage. Let's set you up on $300,000 30-year term life insurance. So on the outside, you say, okay, that makes perfect sense. If something happens to me or happens to my spouse, then the remaining spouse would essentially be able to receive a lump sum dollar amount of $300,000 to pay off the rest of the mortgage. Well, understand that there's a cost. The more life insurance coverage that you have for the longer duration of time, that's going to throw a larger risk on the insurance company's books to therefore they're going to transfer that risk directly to you. So that's why somebody that has a 30-year term life insurance policy for $300,000 might be paying $600 a year, as opposed to somebody that has $300,000 10-year term life insurance might be paying $250 per year. It's because that risk is greater for the insurance carrier to say, well, if this person passes away, obviously for a longer duration of time, we have to pay out $300,000 of a tax-free death benefit, in the long haul. So there's a way that you could set up the same sort of plan. This is something that I explained in other videos that I said, well, rather than have $300,000 for a 30-year term time frame, you could have a $100,000 10-year, a $100,000 20-year, and a $100,000 30-year term. Reason being is because after every 10-year time frame, you don't have to pay for that next coverage, and therefore, so after 10 years, you're only going to have $200,000 left on your mortgage, so therefore you're going to have $200,000 left in your life insurance needs. After another 10 years, which would be 20 years total, now you're only paying for an additional 10 years worth of life insurance for $100,000. So that little trick could save you thousands upon thousands of dollars in the process. Now, for somebody that's looking mainly as an inheritance type goal, there's going to be an expiration date on that term life insurance. So if someone's looking to say, well, if I pass away in 50, 60 years, regardless of however long I live, if I live into my 80s, my 90s, my 100s, whatever the case may be, I want to make sure at least there is some sort of tax-free death benefit going to my beneficiaries that I could leave as an inheritance. It's something that, I want to basically leave some sort of legacy to my family. Well, term life insurance is going to have an expiration date. So it's not going to, the max amount of term life insurance I've seen is about 35 years worth of term life insurance. But like right when someone starts turning age 50, in their 50s or in their 60s, the companies cap out how long that they're going to cover that person for. So a lot of times you might see somebody that's trying to apply for term life insurance in their 60s, and the best offers would be like a 10-year term life insurance because the company's not going to give that person, a 30-year term life insurance plan because the risk is going to be so much greater for their books than, the 10-year that they're able to control a lot easier. So that is where the universal life insurance or the G stands for guaranteed universal life insurance comes into play. What this says is you could set up a policy that's meant for max death benefit that kind of acts like a permanent life insurance policy to age 120. Because what we're doing is we're stripping away all those different costs associated with the cash value, and we have a guaranteed death benefit rider that's attached to a type of universal life insurance product. So understand, it's not like universal life insurance that's going to be tied to interest rates or something that we're just kind of minimally funding this policy. What we're doing is we're saying even if this cash value goes down to $0 with a typical life insurance plan that I showed you before with whole life insurance or IUL or universal life or variable universal life, then that means that your policy blew up and now you have to pay a large amount of premium dollars just to pay for life insurance for that next 1 year term. With a guaranteed universal life insurance, if your cash value hits $0, and that's the whole purpose of it, all we're doing is just making sure that we're paying that monthly premium or the annual premium because that guaranteed rider keeps that death benefit in force regardless of whatever that cash value grows to. And that guaranteed rider is set up at inception, so that's why it's known as a guaranteed universal life insurance policy. You don't have a lot of carriers that offer it, but the carriers that do offer it, there's ways on how you could save thousands of dollars than, just thinking that you were handcuffed into a whole life insurance contract or, a guaranteed index universal life insurance contract, whatever the case may be. So one of the more important aspects that I want to talk with right now is the avoid the mistakes per company. You have a lot of different companies out there that they send mailers, they have advertisements, and they're fly-by-night companies, meaning that they'll try to lock somebody in, get them set up with term life insurance or some sort of crappy permanent life insurance policy, and then God forbid whenever that insured passes away, they try to fight like all like heck to make sure that they're not paying out that claim. And that's one of the things that we're very unique on a national basis on, is we make sure that we go through all the top carriers in your specific area, so that if term life insurance is your specific goal, when first calling in our 1-800 number, it's 1-800-566-1002, we offer 24/7 customer service. And what you'd be doing is dealing with a specialist. Say, I'm interested in some life insurance. I want to speak with a specialist. And what that specialist is going to do is uncover what your needs are. There's many times that term life insurance will be able to suffice, what your needs are. If you want to have some sort of permanent coverage need, then what we're trying to do is make sure that we're squeezing the smallest amount of premium dollars into the highest quality companies, so that you're not overpaying for your life insurance. If you have a need of $500,000 of life insurance, you do not want to be upsold to $1 million of life insurance and say, and realize 10 years later that you were paying these astronomical price for $1 million of coverage when that was not your need. So, what we try to do is we're affiliated, because we're an independent agency, we're affiliated with all the top carriers, and then we utilize multiple strategies to make sure that what is the way that we could provide you with the cheapest possible price and the highest quality company, so that, God forbid, something happens to you, that life insurance is going to be paid off very simply, to your beneficiaries. We're setting it up the right way. You don't want to play any games with life insurance. Unfortunately, I did come into a bunch of death claims with my with clients that I've just been dealing with throughout the years, and because of the due diligence I try to instill with my own representatives, I constantly tell them, listen, this is not something that you're looking primarily for your benefit. It has to always be set up for the client. You have to make sure that you're crossing your T's, you're dotting your I's the proper way, and you're going with these good quality companies, because when crap hits the fan, excuse my language, you want to make sure that you're able to provide that beneficiary with that check. And that's why we've never had an instance with the company, and we are A+ rated on the Better Business Bureau, is because when an individual gets set up with their life insurance through us, the family's going to be taken care of the right way. And that's something that we take very seriously, because with life insurance, you cannot mess up setting those types of contracts up. You do not want to go and lie on your application. You don't want to go and go with these really bad companies, because those companies are just trying to take your money and essentially will try to fight like heck to not pay out that claim. So what we want to do is make sure that when calling into the office, we're going through all the top carriers out there. We're making sure that we're providing you with what the cheapest prices are, and we'll show you the top 3, top 5 options, in your particular area. So if you have a better feel about a company, we'll explain our process. There's times that I say, listen, this company might be $1 more per month, but I'll recommend this company because I did have a death claim, through this carrier, and they paid it out in such a quick time frame, as opposed to the other carrier that, took a month to pay out that death claim. So, there's a couple of different nuances, but at the end of the day, if term life insurance is particular to your goals, you want to make sure that you're maximizing out that term life insurance and you're having the cheapest possible price for that. If universal life insurance, meaning that inheritance goal, that permanent coverage, if you are not interested in the cash value association, then a guaranteed universal life insurance policy, could be right up your alley. So, in closing, I want to thank you very much for watching this video. Please make sure to subscribe to our YouTube channel, Retire Sharp, so you have access to the most updated videos. I hope that you enjoyed, and feel free to give our 1-800 number a call, 1-800-566-1002. Thank you for watching, and I'll talk to you soon.